All right, so here we are on top of a windmill here. Peter, since you're Danish, we thought this would be appropriate to be incorporating some windmills for us to lead our panel from. And we're standing on top of this. I hope it's not too windy for you.
No, this is great. I mean, I'm a big fan of windmills, given my Danish
Background.
inheritance. Yeah, exactly.
So, welcome, Peter. Thank you for joining us for our ESG focused event. And our specific panel topic is the year of ESG is our focus. Certainly, the trend is set to grow with the new Biden administration's ambitious green program and increasing concerns about global warming, heightening extreme weather, and et cetera. Now more than ever, companies approach ESG or environmental, social, and governance aspects of businesses certainly is becoming more and more important to any savvy investor. And I was doing some research. I realized, when did ESG become a thing? And to me, it seemed like in the 1960s, the practice of ESG investing began as socially responsible investing, with investors excluding stocks or even entire industries from their portfolios, based on business activities such as tobacco production or involvement in the South African apartheid regime, et cetera. But in 2020, currently, the world has not only confronted the pandemic, we've been focused on the threat of climate change, et cetera. And so, therefore, as more people focus on ESG, we're seeing many companies lay out a series of steps to make sustainability a key component, certainly, of their investment approach. So we've had this banner year with ESG in 2020, and I want to lead that to you, Peter, to sort of introduce your company's take on ESG and your focus with this at this point.
Yeah, I totally agree. I mean, ESG is not necessarily anything new. It's been around for quite some time, but we have definitely observed a big uptake in interest over the last few years. And some of that has also been driven by the general sentiment in the market, or also amongst, let's call them regular or normal people outside of finance, right? There is a lot of focus on climate change. There is a lot of focus on sort of sustainable ways of running your company, dealing with gender equality and all of these sort of things. From a RavenPack perspective, I mean, we are experts in natural language processing, and we focus on turning unstructured content, primarily news, into a structured set of analytics that can be consumed by our clients. And one of the challenges that are faced, that some the sustainable investing investors are faced with today, is that a lot of content comes unstructured. They can't necessarily rely on traditional structured fundamental data to meet their ESG mandates, and therefore have to rely on other sources of information. And this is where RavenPack can help our clients to incorporate systematically this type of information. We, as a company, we focus on detecting different types of entities in the news. We look for, whenever companies are mentioned, we look for places, organizations, for instance, the World Health Organization, which has been very prominent in the news over the last year or so, but also NGOs like Greenpeace, and whenever they show up doing various activist activities and so on. That's we sort of help picking these things up, and we look for those entities and the context in which they're mentioned. So one of the things that we also do is to look for various events as they play out in the news. That could be companies that are involved in legal or labor issues, where there are some crimes taking place. That could be corruption or bribes, something like that. It could be regulatory investigations, security breaches, corporate responsibility, health and pollution related things. So we help our clients to pick up these things in the news and all of the sentiments around that they could ingest into their models.
Okay. Terrific. And it's, where is what are the trends that you're seeing specifically?
Yeah, we could definitely see. I mean, over the last couple of years, there's been a huge focus on ESG when it comes to conversations with clients. I would even say that, 30-40% of all conversations really are related to ESG. And the interesting thing is that it's global. It's not just in Europe, who obviously were or have been the leaders in the ESG movement. We have also very much seen in the US and also in Asia. And that sort of really has kicked off over the last couple of years. And I think it's also something that has sort of had an extra push last year with the coronavirus playing out, and
Right.
also, of course, into this year, right? That it's really become a thing, right? I mean, there's been a lot of discussions around the social aspects becoming a key driver. And this focus on a pandemic and how companies are dealing with, the change in the supply chains, the change in sort of
Right.
the way we work together, work from home, this sort of thing. All of that plays into how you are looking at it, sustainability from a corporate perspective.
Thank you. What are some of the challenges that your clients are facing related to ESG specifically?
We can definitely see, I mean, data is a real challenge. As I sort of briefly touched upon before, I mean, you can't just rely on fundamental information. That will, of course, still be part of your investment process of building signals around fundamental data. But you still have to meet your ESG mandate and seeing what companies are doing to transform into becoming more sustainable. And also if they're dealing in areas, you mentioned sort of exclusion lists, don't deal with companies or invest in companies that deal in controversial weapons or deal in tobacco or alcohol and so on. Those are sort of traditional ways of looking at it. And they're still very much on the agenda, but it's become more sophisticated than that. And we are seeing investors really being challenged in finding the right data sets to take a more sophisticated approach to ESG and sustainability. And I think also this especially holds true as you go global. It may be a little easier finding data sets in the US, but if you start to, or in developed markets in general, but if you start to go towards emerging markets, it becomes a real challenge finding data. So that's an area where we are helping clients. We are so lucky that, we are experts in news. And news is born global, right? News is born global. It covers both on the corporate as well as on the macro side of things, and it covers a variety of topics, also very much related to ESG. And you can track both what companies are saying as well as what they're doing, and also what analysts and so on are saying about their initiatives, right? So it covers a great deal of topics, relevant topics related to ESG. And then the last thing is that it's real time, right? So that's also a key advantage that our investors can take advantage of, because that is also, as I mentioned, is also a challenge, because if you rely on more traditional fundamental data, it's kind of stale. You don't get a real-time view of what's happening in the economy and how it might affect your portfolio. And news can help you with sort of a nowcast on the ESG side.
What are some of the use cases that you're seeing specifically? Can you get into that a little bit?
Yeah, I mean, we're seeing a wide range of use cases. They're sort of the standard ways of looking at it, trying to look for ESG sentiment. What is there good or bad news around the various ESG topics for the companies that I'm interested in? Is there a particular media buzz? So that can give you a sense for how big if there's a controversy around a company, how much media attention do you get? That might be something you want to track for your portfolio companies. But we're also seeing applications where you're trying to look at controversy across supply chains. So it's a little bit like a guilty by association, right?
Yeah.
So if you have a supplier that has, that are using child labor or something like that, you have seen that in some industries over the years, right? Clothing industries in particular.
Right.
These are things you want to be on top of, right? And be able to capture. And we're also seeing that sort of influencing potentially how companies want to manage supply chain, their supply chains, not just the various types of risk, not just the controversy risk directly linked to them, but we are also seeing investors interested in tracking whether they are sharing supply chain with companies that are hit by issues, controversies, and so on, that could influence their delivery of goods and services for them as a company.
Okay.
One example, for instance, when Volkswagen had issues with their emissions, the emission scandal, some of their suppliers had to tune in and say, we need to help sort of solve these issues. And perhaps there was no time or capacity or resources to deliver what they had to other of their customers. So they might have to go through a shift in the supply chain, thinking about new suppliers and so on. And that's something that you want to track because there is a risk there, and something that could influence how you decide to invest in these companies.
So that's very interesting. So walk us through, if you will, how a firm uses your product to make money in ESG, for example.
I mean, there's definitely, as we talked about, this factor-based approach to it, where you create sentiment factors and sort of position yourself and saying, hey, I mean, I should underweight exposures into bad ESG sentiment companies. We have definitely seen that ESG sentiment can interact quite well with traditional ESG ratings, potentially using that as a filter before you start doing your portfolio construction.
Okay.
You sort of tilt your universe into a better performing one. So you sort of cap more of the downside risk, and also tilt sort of outperformance a little more into your portfolio or into your trading universe. We're also seeing it for controversy detection and knowing, what name should I probably be moving out of. You can use it for timing, how you want to exit certain names or enter certain names based on their sentiments. We're also seeing people using it for operational alpha. So we talked about exclusion lists before, and one of the things that it tends to be a very manual process, right? You have to have researchers that looks in and really gets to understand the characteristics of the businesses, how they deal with controversial weapons or tobacco or alcohol, as I mentioned before. But one of the things that we're seeing is that how do you maintain these exclusion lists? You have to start off from a list of companies that you start investigating, and it may be your universe is 1,000 companies. Can I go about doing this in a more clever way and prioritize the list of 1,000 companies? And one of the things that we have seen being very interesting is to look at companies that are being co-mentioned in the same news articles. They tend to be closer also in the way they, their business operations as well. So it sort of is a way of getting a fundamental link. So if you already operate with a list of companies that have been confirmed as dealing in controversial weapons, and you see other companies appearing in the same news articles, they're pretty good candidates for further investigation.
Very interesting. So if you, Peter, were going to build an ESG strategy, what would you do? How can you walk us through that to give some advice to our buyers and so forth?
I like to think about it in a way of a data mosaic, and I can see that that's also where a lot of our clients is going or thinking about it. I think it's important that you start out with identifying the various key risk indicators that you could be exposed to as a company or as an economy from an ESG perspective. And then you should start to look at it as an investor to say, what are the data sets that could help me shed some light on these various risk dimensions? It may be you need, obviously news data. That's sort of the core to everything, of course, right? But it may also be that you need to buy, shipping data, or you need to get GPS data. See how many cars are driving between one city and another. That could be a good indication of whether there are lockdowns. That was a very valuable data set
So
during the Corona crisis.
Data sets together through the Ensemble
Exactly.
platform.
Exactly. You need to look at the data mosaic. All of these things, all of these data sets combine into a big set. That's sort of the starting point, and making sure that you cover all of the risk dimensions that you're interested in, right? Also, the stuff that isn't necessarily super valuable now, but as soon as the risk hits, it's too late to think about what data sets could have been useful. You need to have it beforehand. So you have to think about it as a more comprehensive data strategy. And as soon as you have this data mosaic, you can start to look at the sort of the technology you want to build on top, right? Do you need a natural language processing to extract information from it and create analytics around it? You could use that as a centralized sort of data hub and sort of creating a source of truth for the entire organization. You also need to think about, I need something, I need to work around taxonomies, addressing the various ESG dimensions, things that potentially happen again and again and again, right? So companies tend to go through reorganizations. Companies hire and fire people for boards. There may be, lawsuits. There may be corruption charges, and so on. These things are easy to map out. Those are things that happen more, over and over again, and you can think about it as a fixed taxonomy. On top of that, you also need to be able to have technology that sort of lets you have the flexibility of defining the almost the unknown unknowns, or as they appear, right? So the things the risk factors you haven't thought about beforehand, and COVID was one of those things, right? And to some extent, I mean, we have talked about or seen Hollywood movies about these great pandemics and so on, but we never really, at least not in our generation, haven't really thought about it really playing out in real life.
Right.
At least I hadn't. Now, 1 year later, we are a lot more. We know a lot more, right?
Yep.
And educated about that.
Unfortunately.
But one of the things that we saw, I mean, people really struggled was to sort of, how do I start generating data on the fly that can help me address this new risk? So you need to think about the technology of being able to tap into your data mosaic and curate data sets for the specific needs that you have. For instance, back in March, based on all of our news content, we launched a coronavirus dashboard, which captured a lot of interest in the marketplace, both from investors as well as academic. And we were able to measure sentiment around coronavirus in various countries. We were linking that to companies and industries. And we were also measuring sort of the level of panic country by country and globally as well. And there's been quite a bit of research on using these indicators to see if they were valuable to predict the equity markets globally. And the research is showing that if you compare sort of these NLP-driven analytics around panic and coronavirus, that they were much higher statistically significant in explaining equities prices globally in 2020 than tracking something like a number of deaths or number of confirmed COVID cases and so on. And this is something that you could have tapped into your data mosaic and sort of generated within a week or so. You would have set up the data set and sort of build out a massive dashboard that you could have shared across all of your traders in your organization, right?
Wow.
Yeah.
Fascinating. who is the actual buyer for this ESG data? I mean, is it really just the large asset management firms like a Blackstone or BlackRock or so forth, or who would you advise here?
Definitely the big asset managers are tapping into the ESG market big time, right? And are building out their internal frameworks, their own internal processes. They have quite elaborate approaches to it. We're also seeing smaller asset managers and tapping into the space as well. But there are different sort of levels of sophistication across the board. Some are just looking at an off-the-shelf indicator in some sense, like another rating, where others really want to be able to dig in deep and have the flexibility working with granular sort of analytics, having the white box approach, being able to drill down all the way down to the document that generated the insight, right? So it differs, but I will say that, I mean, we are seeing ESG across multiple asset classes. It's not just in equities. We're also seeing it in fixed income very much so as well.
Interesting. So clearly sustainability issues have certainly proven to be essential to long-term investment performance. Definitely the new trend, and RavenPack can certainly provide those tools. Is there anything else you think we should touch upon that's relevant for everybody to hear today?
I think this is a super interesting space, and I think, I mean, there's definitely a focus on turning ESG into becoming more data driven. Historically, it's been a very human driven process. I think the industry is realizing that in order for it to sort of meet the future regulation that we are seeing and hearing about, and which is evolving, it has to be a data driven or at least a data guided process.
Right.
You probably can't entirely remove the human from the equation here. It is a complex, sort of multifaceted space, but I think we also have to make sure. I mean, there's a lot of discussions around greenwashing and all these things, and that is a real challenge in the marketplace. And data, hopefully, it will help us getting more of an objective input into the process that can prevent us from sort of or sort of help us address this greenwashing, where it's companies that, you know, greenwashing is where companies, for instance, are trying to use a little makeup to make them look a little greener than they potentially are,
okay.
Right? And the same goes also for the asset management industry, that you have perhaps some initiatives that looks like you are running a sustainable investment strategy, but when you really look under the hood, it's sort of perhaps not as comprehensive a methodology behind it as you would have liked. So there are these. I mean, there's been research that has gone into a lot of the funds that are calling themselves ESG or sustainable investment funds are probably not as green as they would say. But data should help you being able to create these more comprehensive strategies and perhaps look at it more from an objective perspective. You can describe more about your framework to potential clients or investors in your fund, such that you can stand out and say, "Hey, my process is real." But I think generally, I mean, we are moving towards a more heavily regulated environment, and data is the key here to be able to succeed.
I completely agree. Thank you so much, Peter, for joining us. That was wonderful, and certainly anybody can request a meeting with you after this panel, and we will happily connect.
Thank you, Alex.
Thank you, Peter.
Cheers.